Hey everybody, David Lenevue with Rockmore Wealth Management. This week we're going to talk about the RESP or Registered Education Savings Program. This one's definitely near and dear to our family's heart as we have 4 children that we'd like to get through college or university. So what exactly is an RESP? Well, just like the tax-free savings account and the RRSP, it's simply another investment vehicle that provides numerous government benefits, and in this case, it's for children's education. There's actually 3 different types of RESPs that are available to be opened. One is called the individual RESP, there's the family RESP, and also a group RESP. Now, in my opinion, for the majority of people out there, we would normally recommend a family RESP just because of the flexibility that it provides, and we'll talk a little bit about those reasons here in a little bit. And I will make a note about the available group RESPs, also sometimes known as scholarship trusts or scholarship funds. Once again, in my opinion, I don't believe that anybody should use a group RESP. These ones come with very, very restrictive terms, and the fees in many cases can be prohibitive, and we just would normally not generally recommend anybody to open up a group RESP. Now, who can set up an RESP? Well, pretty much any Canadian citizen in Canada can open an RESP for a child. So mom and dad, grandma and grandpa, even an aunt, uncle, or family friend can open up an RESP and contribute towards it for a child. And there is no limit to the number of RESPs that can be opened for any one child or any one family. Now, I will provide a little cautionary measure for all my American family friends and listeners out there. If you as a contributor are an American citizen or born in the US, or if one of the children are an American citizen or born in the US, you really need to get some good cross-border tax advice before you use an RESP. I know this because we have personal experience with it. 2 of my children were actually born in the United States, and the advice that I personally was given is that there will not be any major benefits. There'll just be complications if they are going to have RESPs of their own. Now, that is my advice that was given to me only from a tax professional, and everybody else out there should receive separate tax advice specific to their individual situation. So what are the benefits of an RESP? Well, first and foremost, every dollar that you contribute to an RESP grows 100% tax-free. But in my mind, more importantly, is the amount of free government money available. So the government will actually match your contributions up to 20% per year. So let me give you an example. So for every child, I can deposit $2,500 in per year, and the government will kick in $500 for free. So with us, we have 4 children. If we were to put in $10,000 in a year, the government will actually top up an extra $2,000. And it's also important to note that we can also catch up previous years if we missed. So for example, if we didn't open up an RESP for our children until they were 2 years old, we can actually catch up previous year's missed contributions, but we can only do it 1 year at a time. So for example, if I had 2 years worth of contributions that we had missed, well, I can add $5,000 this year, and the government would kick in $1,000 extra. And then the following year, I could also add $5,000, and the government would top up $1,000 again. And then I would go back to my $2,500 per year where the government would match every single year. And they will maximize these contributions at $7,200 per child over the lifetime of the RESP. Now, there's also additional benefits that are available from provincial governments. So here in BC, if you have opened an RESP and you fill out the necessary paperwork when your child is between the ages of 6 and 9 years old, the government will throw in $1,200 for free. So there's no reason why you wouldn't open up an RESP in British Columbia just for that reason alone, because it is 100% free money. Now, for families that have a modest income, if you're eligible, there's something called the Canada Learning Bond, which is a one-time $500 payment into the RESP for free. And if you continue to qualify under their guidelines, they will also deposit a free $100 per year as long as you meet the modest income threshold. So what can an RESP actually be used for? We get a lot of questions and concerns with what qualifies. Well, people are generally pleasantly surprised when they learn that the government has been very generous in what qualifies for these expenses. So most Canadian post-secondary education institutions qualify, apprenticeship programs, trade programs, and even a lot of American colleges and universities, their tuition can be paid for by RESPs. Additionally, it's not just tuition that qualifies, but it's also any reasonable education expense. So books, laptops, even housing and food programs will actually qualify. What else should you know about an RESP? Well, when the money is withdrawn from an RESP, it's actually taxed in the beneficiary hands. So that's the student's hands, which is a great thing because students generally have very little or no income, which means that generally they'll pay little or actually no tax when that money comes out. The biggest concern that most people have with an RESP is what happens if my children don't go to school? Well, don't panic because you can keep an RESP open for 35 years. So you can wait and see if they decide later in life, if they actually need to go back to school, that account can still exist and still be there for them. Now, this also turns into what we talked about earlier, why you may want to open a family RESP, because if one child decides not to go to school, you can actually use the money for your other child. Now, you'll probably have to pay back most of the grants that were given to your first child, but the other child can use the remainder of that money for themselves. Now, what if no children go to school? Well, the first option that would probably be best available for you is you can actually withdraw all your original contributions from the account without having to pay any taxes. You do have to pay all the free government money back. And the other option that you have is all the money that was earned on your contributions and on the grant contributions. If you have room within your RSP or your spouse's RSP, you can actually just move that money into those RSP accounts and pay no tax and no penalty. The worst case scenario, you don't have any room and no kids go to school, well, then you're gonna have to take that money out. So once again, you can still take all your original contributions out, 100% tax-free. You do have to pay the government grant money back, and then all the accumulated income or all the money that was made in the account over the years, well, when you withdraw that, you do have to pay tax on that at your marginal tax rate, and the government is going to assess a 20% extra penalty. And that's the worst case scenario. So what is my advice when it comes to an RESP? Well, listen guys, there's a lot of free government money available out there, and RESPs are fairly flexible. So I would definitely open one up. I would open up a family RESP because I can always add children to a family RESP in the future. And if one of my children decides not to go to school, well, simply I'm going to transfer that money to my other children. And I am going to maximize it to take advantage of free government money as long as I can afford it. So what does that work out to again? That's $2,500 per child per year, or $208.33 per month per child. Guys, I hope you enjoyed listening to this today. I look forward again to seeing you guys next week and talking on another topic. If you need our information, want to get a hold of us, or have any questions, please reach out to us through our website, www.rockmorewealth.com. Stay happy, stay safe.